and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock related queries. And don't forget that we are happy because we are in the Friday mode and we get you the Buy Now, Sell Now Pathshala today as well. So stay tuned for that. But before that, let's have a look at what the markets are up to. So Cheryl, markets are seeing a bit of a recovery from the day's lowest points, but that's just happening for the Bank Nifty, isn't it?
You can actually sum it up for the benchmark indices as well, actually, okay. Shrishti. If you look at the way how the markets are panning, we were way below that 18,700 mark. Very good morning to you, firstly. I miss greeting you. But yes, we were way below that 18,700 mark. But as you can see it on your screen, we've seen a steady recovery coming in for the benchmark indices, in line with what also Nifty Bank is posting a good recovery at this point in time. Let's take a look at what the broader markets are doing, the mid-cap index as well as the small-cap index, and how are they performing, and they're underperforming the benchmark indices in today's trading session. Remember, even yesterday you had the broader markets that were underperforming in trade. Talking about the way how the market breadth is very much tilted in the favor of the declines as of now. If you look at the list of losers, is the Adani group of counters that are actually have booked the spot in among the top Nifty losers. That is Adani Enterprises, Adani Ports, top losers on the Nifty, followed by BPCL, HDFC Life, Hindalco, Tata Motors are the other set of losers in trade today. But talking about the flip side, and the one that are bucking the overall market weakness is Bharti Airtel. 2% uptick coming in for Bharti Airtel, NTPC, IndusInd Bank, as well as Dr. Reddy's. All of them seeing decent amount of gains in today's trading session. Let's take a look at the broader at the sectoral indices and what are the other sectoral indices doing in trade today. If you look at the sectoral indices, it's only actually none of the sectors are gaining in trade today. You have the metal index that is down about 2%. You have a power index that's under pressure. Oil and gas is under pressure. And like I said, broader markets as well is actually declining in trade today. So that's the way how the market setup is looking like. Yes, looks like a tad bit of weak session, but you know, Shrishti, off late, towards the end of the trading session, you've seen market stage a stellar recovery, and fingers crossed today is that sort of a day, isn't it?
Well, yes, absolutely. Let's hope for that and let's see, because interestingly, Cheryl, today we were expecting some bit of a weakness in the IT counters, but since the start of the day, all these IT names are seen to be recovering. So let's see how the markets shape up going ahead. Welcome back. You've tuned into Buy Now, Sell Now on ET Now, a show where we get you answers for all your stock-related queries. And viewers, you can connect with us live on a WhatsApp number that will be flashing on the top of your screen, and you can watch us live on TV as well as etnownews.com. We're moving on, and let's start taking your queries onto the show. Before that, let me welcome on board our two experts onto the show. And today we have Hemen Kapadia onto the technical side, and we also have Avinash Gorakshakar to guide us on the fundamental aspect. A very good morning to Avinash as well as Hemen, and welcome onto the show. I'm taking the first query, and the first query is from Sam from Goa. Hemen, he wants your advice on SBI. He has these shares and his buy price is 589, and he says that this particular counter is under pressure, but going ahead, do you expect any rebound? Will that be a hold, exit? What to do in this one?
A very good morning to you, Krishni. Thank you for having me. I think if he has a little bit of patience, then I'm assuming it's not an F&O position. Otherwise, the stop loss should have got activated by now, honestly. So assumption is it's not an F&O position. Yes, so we are at 558 currently. Intraday low 555. Very strong support comes in at 545. So I would suggest a hold. We've been down for 4 weeks. The banking index, the bank Nifty itself has been overbought, has formed a rounding top. So we worked into a corrective phase. The bigger picture still remains pretty sanguine. So hold. Assuming we might see 545, but that's not a cause for concern. So yes, it could take some more time to bottom out.
All right, this next one is coming in from Veni, and Veni is a senior citizen from Hyderabad. Purchased Bajaj Consumer 300 shares at a price of 203 rupees. Bank of Maharashtra 800 shares at a price of 32 rupees per share. Hemen, the gentleman wants a technical analysis on both of it. What should his strategy be right now? Wholesale or average?
Okay, firstly, I'll just take Bank of Maharashtra. Time frame holding, I assume, is 6 months, or he needs to keep a time frame of 6 months. So if that is the time frame and longer, it's a very clear hold. Walked into a corrective phase. The stock remains in a uptrend on the long-term charts, but yes, we walked into a correction and we're at 27. Be prepared to see 25 and a half on the downside, and at least a month more of a decline. So by the end of this calendar year, I believe we should be back to above 32. So it's a very clear hold as far as Bank of Maharashtra is concerned. But yes, minimum time frame of 6 months. The second stock you mentioned, Cheryl, is Bajaj Consumer. Uh, the stock is breaking out of a probably a 12 to 14 month consolidation. Extreme short term, yes, you could be seeing some consolidation, time price correction. If the holding is of 1 year or more, I think it's a very clear hold. Distinct positivity seen on the charts. I believe a long-term bottom has been made. The next year or two should be positive for Bajaj Consumer.
Okay, moving on to the next query. And Avinash, coming to you for this. Firstly, a very good morning to you. And the query is from Satya Veni, and he says that he is holding Lodha, 100 shares at a price of 690 rupees. And the other counters is Federal Bank, 600 shares at a price of 130 rupees. He says currently at a loss. What to do in both of these counters? Should he go ahead and average these names? He's a long-term investor.
Srishti, as far as Lodha is concerned, I think he need not worry, because I think looking at the kind of projects they are implementing and the kind of visibility the company has for the next 12 to 18 months, I think it would be a good opportune time to actually accumulate the stock in this weak market, provided the investor gives a time frame of at least 12 to 15 months. I believe the real estate market is growing quite well, and hopefully if interest rate cuts do come in, which I think look very much possible in the next 6 months, then I think the real estate sector would benefit the most. Lodha is a very premium kind of real estate player, and I think the margins would definitely get better as they move on. As far as Federal Bank is concerned, also this has been my favorite pick. So I think any downside coming in is a short-term kind of phase. The bank is doing extremely well. Not only is their CASA ratio improving, they've got a very large NRI base. And most importantly, now they have diversified even into gold finance. So my sense is that if the investor can again take a medium-term view, because in this kind of market, even good quality stocks get beaten down. So he should average at current odd levels and take a 12 to 15-month call even in Federal Bank. So both these stocks he should hold on. If possible, average a little and take a medium to long-term time frame.
The next one is coming from Amrita, who's writing from Gurgaon, and this one is for you, Hemen. Birla Corp at a price of around 1,185 rupees per share wants to know whether should sell and instead swap to Ambuja Cement at current levels.
Okay, that is a slightly dicey question. Both are in a medium-term uptrend. Birla Corp being a mid-cap player looks technically stronger in the sense probably it's high beta, so the movements are much more. I don't see any harm in shifting, and I don't see any logic either, because both are cement, both are in intermediate uptrends, and for both the longer term charts are looking interesting. But I would suggest hold on to Birla Corp if she's got a slightly shorter to medium term view. If she's got a longer term point of view, then a shift to Ambuja is advisable. Yes.
Hemen, just coming to you for next one, because this one is on an IT name, that is HCL Technologies. The question is from Hamza, and she's holding 140 shares of the same at a price of 1,037 rupees, currently at mild profits. So she wants to know that can she add more at current market price, because given the whole news that we are witnessing for the IT names, all these names are under pressure, but for today they are seen to be recovering. So going ahead, what kind of a trend are you expecting?
HCL Tech is breaking out of a seven-month consolidation phase, Shrishti. So on technical parameters, it is ticking all boxes. Yeah, short term there's a cool off coming in. I think the market itself is slightly heavy and overbought. We've not seen a significant correction to the up move. So after 7 months, the breakout level is 1155. So I would suggest, I think one can add more on a decline, if any, because if it sustains above 1155, I assume it would. The stock is heading towards 1240 and higher. So I am quite positive on the stocks because after a 7-month consolidation, the stock is breaking out. The only caveat, if any, is I'm talking about monthly charts and we still have a few trading sessions left for the month to end. So ideally, I would need the stock to remain above 1155 at the end of the month. That is the case. I'd say 1250 coming soon.
One more coming your way, Heyman. Very sorry about that. But Page Industries is the counter. Ajay from Bangalore has about 10 shares of Page Industries, purchased at 37,750 rupees per share. He wants to know whether the stock will see a further downside from the current levels, and also what's your view over the next 3 months for this counter?
Absolutely fine, Chel, no problem. Any number of stocks is welcome. Firstly, I'll just mention a big range coming in. Is 35,000 on the downside and 43,000 on the upside. So we've been in this range for the past 3.5 months, and I don't think that a range is going to go away in a hurry. We remain here. Short term, there is a downward bias. On the weekly charts, we need a closing about 39,000 to bring back a little bit of sanity, or in the sense, the first technical green shoot. 39,000 important on the weekly chart. So I would say hold as of now. It's a rather big range, so there is no sense in cutting corners. If 35,000 breaks, you need to exit. I know it's far away, but there is nothing significant before that. I believe we'll stabilize over here about 39,000, 41,000, and then we see 43 and 47. So I would say hold on. Currently not trending, but it's not looking particularly bad either.
Coming to you for the next one. This question is from Sushil from Indore, and he has 200 shares of CItronics. We don't discuss this stock much often. I think I'm looking at this name for the first time. So do you track this one? Sushil is holding the shares at a price of 823, and he's at a profit in this particular name. How do you see this company, and going ahead, can you share the outlook for the next 1 year?
Shristi, can you please repeat the name, please?
That's CItronics, STYRENX.
Actually, I don't know this company, so unfortunately, I won't be able to comment.
Okay, I'll give it a skip then. Cheryl?
All right. This one is coming from Satya then, and he is saying that due to the bad news, he's looking to exit from TCS Avinash, but he wants to know which one is a better pick right now, Paytm, or should he look at AB Capital or some other counter altogether? And if possible, if you could tell him exactly when he should look to enter these counters. TCS, yes, IT companies seem to be marred right now. You had Accenture also giving in a poor guidance. But yes, I believe we had various brokerage notes over the last 2 to 3 days that have come out saying that this will be a tough time for the IT sector, isn't it?
Yeah, Cheryl, I think, if he wants to make a switch, I think AB Capital seems to be a better bet. I think it's an Aditya Birla Group company, and all their businesses, the mutual fund, the ARC, as well as the insurance businesses are all, housed in AB Capital. I believe, mutual fund business has already got listed. And I think in future going forward, one advantage for shareholders here is that there could be a lot of value unlocking, for the other part of the business. Coming to the financials of AB Capital, I believe, numbers have improved significantly for, 23. And there was a very strong business commentary after the FY23 numbers. So my sense is that housing finance plus mutual funds, as well as the insurance market, Aditya Birla Capital has got a very large presence in the market. So I think if the investor can hold on for the next, say, 12, 18 months, this could be a very good switch. And obviously the risk reward could be better. So even at the current levels, he could definitely chip in and, add his investments, in AB Capital.
Okay, Avinash, coming to you for the next one. The question is from Venkat Rao, and he's holding Devyani International shares, 300 shares at a price of 208 rupees. He says currently at a loss in this one. So going ahead, what's the outlook, and at what price can he average these shares?
Devyani is a very well-known play. I think they are franchisees for Pizza Hut and KFC. And I think recently the managing director had a very strong commentary. They said they are present in almost 1,200 locations. Another 300 locations are going to be added now. And just to inform the investor, this is part of the Varun Beverage Group. They manage Varun Beverages, which is their parent company. I think the growth opportunity in QSR is quite humongous. And over the next, say, 2 years, one could expect a very decent risk reward here. But I think if he wants to buy, he should keep a price range of at least 175, 185, which I think is a fairly good support level to accumulate. And I think keep a 12 to 18-month time frame. I think QSR business will definitely do well, and this business needs to be evaluated on the operational EBITDA, not on the profit after tax, which many investors do. So on that point, I think I would be quite confident that over the next 2 years, you could even expect a target price of 250 plus.
All right, another one coming your way, Hemen, this time. Preeta Roy from Kolkata has written to us, and Exide Industries is the counter. 233.9 rupees is the buy price, 100 shares, wants to know whether to hold or exit. Actually, it is at near the current market price if you look at the stock right now.
Yes, sure. I think if it's a shorter term view.
Yes, it's a short term view, yeah.
Then you need to sell because 235 is a swing high and a major resistance level. This level was last achieved in March 2019. So please book profit because if the level comes after 4 years, you'll have significant resistance at this point.
Okay, so that's a sell coming in on Exide at this point. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Steady recovery coming in for the benchmark indices. But let's continue taking all of your stock-related query. And the next one is coming from Suresh Babu, who's a senior citizen. He's writing to us from Chennai, Avinash. And he wants to know what's the outlook on Wellspun Enterprises. He's saying that currently the stock seems to be in an overbought zone. But he's saying that the PE ratio and the book value and business outlook seem to be attractive. So which parameter should he look at while investing in Wellspun Enterprises, and should he take the plunge in this one?
In fact, Cheryl, Hemen is a good friend of mine, so I think on the technicals, he's better placed to talk. But on the fundamental side, I would say that Wellspun Enterprises has a very large order book. They are catering to the oil and gas sector, and specifically recently the company has got very large orders. They have removed some of their non-core assets, reduced their debt on the books. So I think going forward, earnings growth for this company over the next 2 years is going to be pretty attractive and strong. My sense is, I think if the investor can give at least 12 months to this stock, I think he should definitely expect a very good risk reward. And I think even in this market, the stock is holding pretty firm, which clearly indicates that there's a lot of value buying even at the current odd level. So I would suggest him that he should definitely look at it from a 12 to 15-month time frame, a good investment where the risk reward is in his favor.
So it's a thumbs up coming in from Avinash, but what's your take on this, Hemen? Should he look at entering this counter right now?
I would, Cheryl, I would say break up your investment. I mean, do it in not exactly like an SIP, but in installments. So simply because Wellspun is dangerously close to its all-time high. Frankly speaking, we are above that high of 198 in 2008. 10 in 200 in 2010, 203 in 18, and currently we are over here. So we are just in the proximity of 13-year highs, and we've turned back 3 times from these levels. And whenever we've turned back, we've become half. So currently we've had a move from 120 to 218. I think like the investor himself said, we are overbought, yes. Overbought does not mean that it's the end of the world, but yes, it makes you susceptible to a correction. So I'd say buy on a decline. 175 is very strong medium-term support. I do not mean to imply that we are going to go to 175, but it's a level he can keep in mind. And the level before that is the support level before that is coming in at around 199. So 199 and 175, 2 levels where he can split his purchases because support levels, brilliant run-up, could walk into a correction anyway.
That's the take on Wellspun. Moving on, and Avinash, the next question is on KIOCL. This question is from Indira, and she's holding shares of this one from a price of 250 rupees. Currently at a loss, but any hopes on recovery going ahead?
Yeah, I think this company makes iron ore, Shrishti, and I think looking at the kind of developments in the metal market, it would take at least another 6 to 8 months before one could see a very strong recovery in iron ore as well as metal prices. The point is globally, unless China starts buying in a big way, we are unlikely to see any major re-rating. So I would say that if the investor has a very long-term view of at least 12 to 18 months, he can hang on. Otherwise, it's better to switch to some company My sense is, from the private bank space, IDFC First Bank is a very good kind of investment opportunity. That could be considered where, the price to risk is extremely favorable. And I think you could get a very decent risk reward over the next, say, 12, 15 months.
Okay, this one is coming in from Rajan from Delhi, Gujarat Pipavav. He has this counter for the last 6 years. He purchased it at a level of around 150 rupees per share. He wants to know what should he do with this particular holding right now, Avinash, because 6 years he's been holding on to this one, but it's not given him much profit, or rather it's not given him a profit.
I think 6 years is a very long time, Cheryl, but I think the company is doing well. They are, they have got one of the larger ports in Pipavav. And looking at the kind of growth opportunity in the port business, I think there's no doubt that over the next, say, 12 to 18 months, as the country's economy grows, we are going to see a lot of exports, imports happening. So here, I think Gujarat people should do well. And I think the best part is the company is extremely, debt free. There's hardly any debt on the books. So scalability and operating leverage is very much present. So I would believe that, despite the fact that he's held on for 6 years, he could hold on for another 6 to 12 months, where I think he could expect a decent risk reward. So there's no need to hurry and sell out now. So please wait for some time.
Okay, moving on, and Avinash, once again coming to you, because this query is for the long term, and Thomas George is holding shares of V-Guard. He purchased these counters back in 2017 at a price of 180 rupees. He's holding 500 shares. So at this point in time, what to do this one? Any advice to book profits in this one? But he can actually hold it for the next 3 to 4 years. So what's your advice?
I think Shristi, V-Guard is a very well-known franchise from South. In fact, within the electrical, equipment space. And I think hopefully this year we have good monsoons. And I think the rural demand for the company's products could be quite strong. V-Guard enjoys a very strong marketing network and has been one of the very oldest brands operating in the country. So I think prospects are pretty solid. I think FY24 should be a lot better. So I think if he's not in a hurry, I think continue to stay invested. The promoter is good. The management quality is very excellent. And I think over the next, say, 12 to 18 months, you could expect some further re-rating in the stock.
All right, this one is coming in from Sushil Kumar, writing to us from Trichy, and this one is for you, Heymen. India Nippon Electric. That's the counter. He purchased about 210 shares at a price of around 427 rupees per share. He wants to know whether he should stay put with this one, exit, or what sort of a strategy should he adopt. And also, if you are advising that he should stay put with this one, then what sort of a target should he eye for this?
Just hold or add on declines. Stock looks good, Cheryl. We are in an intermediate uptrend and we are on the cusp of a longer term turnaround. Volumes this month are 20 lakh high volume in the last 15 months. I believe there has been some smart investor buying. Support comes in as 430. The anticipated target, I can give him, the first target comes in at 490. Second one comes in at 560. So hold. Stock looks good. Further upside seems like a very distinct possibility.
Okay, Heymen, the next query is on DCW. The question is from R.K. Jalan from Mumbai, and he wants short-term advice on DCW, and can he buy this counter at this point?
The technical setup doesn't look very good, frankly speaking, Shristi, but there's a longer-term chart. Short-term view, stock is oversold, downside limited, support at 42 and 40. We need a closing over 44.5 to see a further upside. But frankly speaking, it doesn't look particularly compelling from the short-term point of view, except that it's oversold. Being oversold does not imply there's going to be a turnaround. We need to see a few other things. So I'd say he should buy it only if he's only if he likes the stock much. Keep 42 and 40 as support and stop loss levels. Doesn't look very compelling currently.
Another one for you, Heymen. This one is Automotive Axles. Anand Nayak from Bangalore wants to know whether he should buy it at current price.
Stock is tired. We formed a double top. We've had a scintillating run up. If the stock goes from 350 to 2700 almost, I mean, that's huge, humongous. Overbought, heavy long-term charts seem to indicate tiredness, and like I said, double top. So I'd say I don't see anything particularly interesting. It's poised on the cusp of a correction of a greater degree. A weekly close below 2150 should trigger off a much needed correction, keeping the quantum of the rise in mind. So I'd say wait a bit. Maybe he can call us again next month and take another view. But currently, it looks heavy and overbought for a decline.
Okay, Avinash, coming to you for this one. The query is on Zen Technologies, and the viewer name is Krish, and he wants to know, can he buy Zen Technologies at this point in time? His investment horizon is for the next 3 years.
See, I think first of all, Zen Technologies is now into the drone business, and where a lot of excitement is happening. I think the government is also formulated a new drone policy, and fortunately, Zen Technologies is sitting on a very attractive order book. So I think if the investor has got a 12 to 18-month time frame, then I think he can obviously slowly accumulate the stock. We believe that FY24 and 25 would be very strong years considering the kind of order book they have presently, and plus new orders would come in, would add to the revenue and profitability. So I think consider buying this from a long-term perspective and add on every correction.
Coming your way, Avinash, this one is from Vishwanathan Nair, and he wants to know, is it a good time to enter Sona Comstar and Borosil Renewables?
Yeah, I think both companies, Cheryl, are definitely looking good for the longer term. But in the near term, that is for the next 6 to 8 months, we could see a little bit of pain. Borosil Renewables has just completed an expansion program. But I think in terms of the price, I think a large part of FY24 has got already discounted in the price. So wait for a small correction, and I think buying on dips would be a better strategy. As far as Soma Constar is concerned, see, I think it's one of those companies which is into supplying parts for electric vehicles. They cater to almost 25 global electric vehicle companies. So here also, I think if the investor has a 1 to 2 year horizon, at least 18 to 24 months horizon, he could accumulate. But in the near term, please don't expect any immediate short-term re-rating in the stock.
Avinash, what's your advice on LT Foods? Vinod from Bangalore wants to know that can he buy and invest into LT Foods at current market price? Avinash, this question is for you. Advice on LT Foods.
Yeah, so I think LT Foods he can definitely hold on. See, because currently we are seeing positive tailwinds coming in from the Basmati market, and LT Foods is the branded player. My sense is that if the investor has a 12 to 15-month horizon, he should hold on. We expect better traction in terms of revenue and profitability, especially from the Middle East markets where the company is a large player. So please hold on.
You, Hemen, and this one is from Chitra, who's writing to us from Kuwait, and she definitely is thanking Kunal, but Kunal is not here today, but wants to know about a short-term view on Kansai Nerolac. She is asking whether it's right time to invest for the short term.
Okay, I think she'll need to change her terminology a bit. Trade for the short term, but anyways, that's on a lighter note. We walked into resistance at 470, Cheryl. We've had a run up from 370 to 470. That's $100. Stock doesn't look bad at resistance level. So one, if she wants to trade for the short term, I'd say wait for a small decline. 444 is the level where she can look to buy. She needs to keep a stop loss at around 428 for a target of around 510, 520. Stock looks good, but it's had a run up and we are at a major resistance level in the weekly chart. So I suggest buy these levels. The chances of a correction, small correction setting in are pretty high.
Okay, that's the view coming in on Kansai Nerolac. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. So stay tuned. Welcome back. You're watching Buy Now, Sell Now on ET Now, where we get you answers for all your stock-related queries. And moving on with the same, and Avinash, coming to you for the next one. The question is from Sandeep from Noida, and he's holding shares of Wellspun India at a price of 100 rupees. Wants to know how is the share for long-term investing?
Wellspun India is a very well-known textile player. I think they have a very large global kind of customer base. And I think the fourth quarter numbers have been very solid. In fact, the company reported a margin of almost 15%. And I think with now cotton prices coming down, we believe that the raw material pressure which was seen in the last 2 to 3 quarters is now going to subside. So that is going to give some elevation to the operating margin of this company. More importantly, this company has got a very large presence in the US markets with very marquee customer names like Walmart and many others. So I think over the next, say, 12, 18 months, hopefully, I think textile exports pick up. So this company should also do well. So I would believe, it's a good time to actually hold on here and wait for at least the next 12 to 15 months where we expect better numbers. The company has also announced a buyback, which clearly indicates that the management also wants to, reward its shareholders and add little value to the overall business.
Next one is coming in from Krishna, writing to us from Chennai, Heyman, and he wants to know, is it possible to sell Radical Cathan? He's already purchased his stock at a price of around 1,214 rupees per share. Makes sense to exit this one. It has fallen off from those prices, but looks like he's bought it at a very elevated cost, isn't it?
I think you got it perfect, Cheryl. He has unfortunately managed to buy it at an elevated cost, and that is also, frankly speaking, 1240 is skating on thin ice. We've not sustained above this level very often in this listed history. So, assuming that it's a short-term trade, I'd say you can book your loss because we are overbought, and an upside would be dependent only on a weekly closing about 1240, which on technical parameters, at least in a week or two, looks difficult. But if it's a longer point of view, we are in a very clear long-term uptrend. Expect 1300 and more, but short-term view is not so sanguine.
All right, this next one is coming in from Puneet, and he's writing to us from Delhi, and he wants a short-term expected target for HCL. Though he wants me to ask you this query, Avinash, and I'm unsure if you can give a short-term target for HCL, given the fact that now that the tie-up is confirmed with GE Aerospace. So he wants to know what sort of a prospect does HCL have going ahead?
Cheryl, this company will benefit significantly because this order win is now going to get converted into top line and profitability over the next, say, 2 to 3 years. So my sense is that, if you can wait for the next 12 to 15 months, I think short-term targets could obviously come in fast. But now with the given weaker market, we are seeing that even such stocks have been beaten down. So if he has a positional view, I think he could even get prices of 41 or 4200. The stock is going to split also. So I think you'd see a lot of action in this counter in the coming weeks.
From Srivasa Rao from Hyderabad, Avinash did share his positive outlook on the real estate space. But this viewer is holding 1,000 shares of DLF at a price of 500 rupees. How are the charts looking like for DLF and going ahead? Is that a hold or sell?
Short-term view would be a sell. Medium-term view would be a hold. A longer-term view would be a buy on decline. Rounding bottom, the real estate index itself has woken up after 12 years of consolidation. I believe the next couple of years are going to be good for real estate and DLF.
All right, this one is coming from Sandeep. He's writing to us to understand whether in pharma, Capgos and FMCG sector, he's looking to invest in these sectors for a period of about 4 to 5 years. Which stocks would you recommend, Avinash?
From the capital goods sector, we continue to like Larsen and Toubro. Cummins. We believe that these are two very strong bets which could possibly give a decent risk reward. At the same time, the margin of safety also is pretty large. So I think in these weak markets, Cheryl, I think the investor should make an opportunity to buy such kind of stocks on decline and follow an SIP approach, because these stocks would obviously give a return over the next, say, 2 to 3 years. Wealth creation would happen, but I think you need to have that time frame firmly in your mind.
Okay, moving on, and Hemane, what's your outlook on Reliance? Manish Bhatt from Ahmedabad has bought shares of Reliance at a price of 2,566 rupees. He's holding 750 shares, and just a week before he entered in this one. So wants to know what are the support levels for Reliance and the outlook going ahead.
Shishti, support levels for Reliance 2516, 2480, 2420, 2380. I don't want to scare him. 2380 doesn't look like coming, but just a few support levels on the daily and weekly charts. Stock into short-term correction. The medium-term picture seems unequivocally bullish. 25, 70, 80, that's a small range that is important. We overcome this and Reliance leapfrogs to higher levels. Looks good. Short-term cool-off happening. About 25, 70, 80. Much, much better.
All right. With that, we actually kickstart with the rapid fire then. The first one is coming in from Manoj Nair from Bangalore. And Heyman, CG Power, purchase at 50 rupees per share, hold or sell?
Hold.
Okay, Himen, what's your advice on Chola Finance? Dasaradi has bought shares at a price of 356 rupees at this point. Is that a hold or book partial profits? The counter is Chola Finance.
Congratulations, book purchase, book partial profit.
Okay, this one is coming from Akhil from Trivandrum. Wants to know whether it's right to hold on to Cochin Shipyard. The buy price was 646 rupees per share. Avinash?
Yeah, I think you should add on, you should average also, and you should hold on. Yes.
Avinash, what's the longer term outlook on Heritage Foods? Mr. Singh wants to know how are the fundamentals looking like for this one?
I think Heritage Foods definitely should do well. Milk prices have started correcting, and I think they have a very strong base in Andhra and the southern market. So I think please continue to hold on. Give a time frame of at least 12 to 15 months.
India Post Housing Finance is a counter. Heymain Shashwat from Delhi has purchased this particular counter, 100 shares at a price of 205, saying this stock has not moved much. Should he average now or sell at a loss?
Sell at a loss.
Okay, Himen, what's your outlook on Marico? Sudhir Malhotra from Delhi has bought 7,000 shares at a price of 515 rupees. At this point, should he hold, sell or buy more? And in what time frame are you looking at this one?
Hold and for a monthly closing about 5 to 15 months of consolidation should give a move up to 610, but buying more monthly closing about 550.
Okay, RK Ahuja has given me a slew of stocks, but I'll take two of those. Pidilite and Tube investments are worth investing in for the longer term. Avinash?
Yeah, I think Tube investment also is a good buy if one has a 1 to 2 year view, and Pidilite can be accumulated with a 12 to 18 month time frame.
Okay, just squeezing in the last question quickly. And Himen, what's the outlook on Aurobindo Pharma? Satish has shorted the futures of Aurobindo at a price of 671 rupees. What's the outlook on this one?
Keep a closing stop loss of 690, close above it in a 15-point upside.
Alright, and with that, we come to the end of Rapid Fire as well as Query segment as well as this week's edition of Buy Now, Sell Now. So it's a good buy from Shrishti, myself, producer Abhishek, director Santosh and the entire team who put the show together. We will see you next week on the same show, Buy Now, Sell Now at 11 a.m. But for now, markets at noon will take the action forward.